Move into 2012, what can we expect with the new year just around the corner? We are here with two market experts, Tyler Vernon. We've got two ties on the show today. Chief Investment Officer with Biltmore Capital, and Kevin Karan. He is Market's Private Client Group. To both of you, great to have you with us today.
Great to be here.
Let me start with you, Tyler, first of all. I was really looking forward to a better year next year. I was thinking, well, the economic data seems to be turning up. Maybe volatility will die down. Things are feeling better. But you say, Groundhog Day, next 6 months going to look pretty much like the last 6 months.
Well, I think we'll get some short-term rallies here. There is some better news that's come in, but look at what the Fed came out. Chicago Fed president a month ago said, we want more stimulus, or at least he wanted more stimulus.
Right.
We have a Wall Street Journal article today talking about extending language for low interest rates. One of our bigger concerns is a reduction in capital expenditures and that the consumer isn't going to be able to pick up. CapEx has really brought us out of this recession and drove the recovery the last couple of years for tax changes and other reasons. It's just not going to be there.
Well, why do you say that about the consumer when you do look at the retail data, at least for November and December so far in this holiday season? It has been better than expected.
It's better than expected, but I think not only do they have to be better than expected, but they have to take up the slack that companies have. And I think when we get housing that continues to be so poor and individuals have their largest asset that continues to just mutter along, which is the spending isn't going to be there.
Hello, mutter, hello, fodder. Kevin,
here in the United States. So, Tyler, here's the question. At what point do you think the United States can convincingly disconnect from the problems of Europe and start potentially attracting capital and moving forward, even if, for example, Europe is dealing still with issues like debt and austerity measures and all the things that have been holding it back?
Well, I think it's going to be hard because we've just started to see austerity measures go into place. Italy just voted on some of these, and I think we haven't really seen anything as a result of that. We work with some individuals who run some businesses there, and they haven't really seen the slowdown happen yet. So I think when that happens, it's going to affect our GDP here tremendously.
But is the expectation of that already factored in, do you think, in the markets?
I don't think so. I don't think so at all. I think we haven't had the effects, and I think we'll continue to see volatility. I think we need to fix that situation before we have continued upside here in these markets.
you both like
the S&P ends next year, and how do you make money to get there?
I think on the S&P, we'll be sitting around 1330, 1340. I think investors need to think a little bit differently. We all sit here, we talk about markets. There's been some interesting other strategies that have come into place. Managed futures, for example. Traders through mutual funds now. Your viewers can buy into these kind of vehicles that will buy in short currencies and commodities and interest rates. I think we need to get a lot more flexible. I think technology could be a real upside surprise here. We just have a tremendous thirst for technology. I think we'll see an upgrade cycle, an enterprise upgrade cycle.
Despite the warnings from like Texas Instruments.
Well, I think that presents a great opportunity here. I think, if you look at Apple, 10% of online sales were going to Apple. I think you have to be, Intel, I think, is a great name. It's giving a great dividend, and I think they'll show some real upside as we get later on in 2012.
Fantastic. Kevin, Tyler, thank you very much for joining us, and have a great holiday.
Thank you.
Thank you.
Happy
cool
holidays.
name, Tyler. Let's go to Brian Shackman.